Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment workshops and our entry level into life insurance itself. And all this week, we're doing current assumption UL. And I want to just introduce you to our Eclipse illustration software, which I've been talking about all these weeks. I want you to go out and download it because we believe it's the most user-friendly software we've seen. And if you're looking for a good tutorial kind of entry into it, this is a great piece of software by Lincoln Benefit, an Allstate company. That's our sponsor today. And of course, all this week. And you'll go out to their site, www.lblsales.com/ETW, and click on Run Installer and download it. That's www.lblsales.com/ETW. And when you download it, you'll be able to go page by page with us. And we feel like it's going to be very helpful today. If you've already done this, that's great. If you haven't done it, just go ahead and pause, go out to your website, to your browser, go ahead and download this. Again, www.lblsales.com/ETW. Also, another item that we want to talk about, and the actual web address is at the bottom. It's rather long. I'm so sorry for that. I tried to figure out a way to shorten it. But Lincoln Benefit also puts out excellent tools. One of them I really like, which is your Facts of Your Life booklet. It's a great harvesting of data. It's a great client piece. Even if it's your prospect, say, hey, give it to your prospect. They have electronic version as well as booklet version. If you want it, just go out to their site and download it. It's excellent. But on top of that, they also have prospecting letters and postcard prospecting postcards, which we think are just excellent. So if you're looking for kind of a marketing tool or something to get you in the game or a good starter kit, this is an excellent part of the Lincoln Benefit site. And again, with their Eclipse software, and this, I think, is a really good tool. And if you've missed any of our prior shows, you can go out to our site, www.brokersalliance.com. As soon as you come on our homepage, you'll see our show, The Business Insurance Zone, playing on the everyday, Monday through Friday daily show. But right below it is the red on-demand video button. If you just click on the on-demand video button, you can go back and watch this show and all our shows all the way back to the beginning, which, by the way, we highly recommend. And one other thing, when we're going ahead and handing out certain documents that you'll see on the show, you say, Steve, I wish I could have that document. Just write me at thebiz@brokersalliance.com, and we'll send you any of your requests. So if you give me an email request and say, I really like that document, like yesterday, we had a lot of good email on that one doc that I showed on Universal Life. Please feel free to go ahead and order it. The Biz, THEBIZ, at brokersalliance.com. And don't forget, we're giving away our life manual and the vocabulary, the accompanying vocabulary, which we believe is huge because when you're listening to me speak, you say, boy, I don't really remember, what does that word mean? The vocabulary will really put you in the game. It's something you should set aside in your workshop as part of when you're watching these videos. Always have that vocabulary sitting on the side. Well, today we're talking more and more again, and we're going on the software. And let's see if we can get to it here. We're going on Lincoln Benefit software. And again, if you have this downloaded, you should be on here. And once you go here, you'll want to go ahead, and what we've chosen is a basic universal life contract to walk through using their software. So when I come to the beginning of their software, I'm looking at this, and I could put the birth date in, well, although I've already put 45 in. I chose my gender, my male. And again, depending upon what carrier, this is just one, here is their options. Preferred elite is what I'm trying to select, and I did. And then also, if this client was below standard, I could actually plug in the table ratings. I could also plug in flat extras, permanent and term. And I could use either one of those. I could actually add a second client maybe onto this contract as maybe a writer. There's all kinds of things I can do, but here on my first page, I'm looking at the insured. And then when I come in here, it gives me an opportunity to choose, in this specific one, what they call their total value area. And it's a good piece. I don't have time to get into it today, but I might get into it at the end of the week. And it's just a nice piece. it's a great proposition for your client to look at the value of what they're getting, especially if you're looking at term invest the difference. Look at these values and say, can I beat that in this market today? I don't think so. So here's another area. I might want to desire in my current assumption UL, I could pay the base premium to keep the policy in force. They have a safety net. It's a limited period in time. It doesn't go forever. It's not like guaranteed UL. They also have a minimum face amount and a maximum face. So if you say, oh, I have X amount that I can spend either monthly, quarterly, semi-annually, or annually, it'll actually factor what's the minimum for income or what's the maximum you need for coverage with the money that you have. So you could say, I'm going to specify, and I'm going to come down here and I'm going to use $250,000 or $1 million or whatever you're going to do. And remember, yesterday we talked about option 1 and 2. They have actually a third option. Again, I don't want to get into it because I wanted to do just the basics for this kind of training. So we're using option 1, and in Lincoln Benefits language and the language of a vast majority of our carriers, option 1 is level death benefit. So when I look at this, I can go ahead and sit there and I could add a term rider to this. Let's say I don't know if I can afford a permanent, but I wouldn't mind having a permanent on. I might have some future ability to fund that for a supplementary retirement. I might be able to fund it just to have a sinking fund. Maybe it's my business. But right now I can't afford it. So I could add a term rider to my UL. And almost all the carriers that use current assumption universal life give you the ability to put on a term rider to actually mitigate the initial costs. And so that's one option that you could use. Another one is our premiums. Now, in this case, again, I could choose their safety net premium, I could specify a premium, or in my case, I said, I already know my death benefit, I just want to know what's the cost. So search for the cost. However, do I want to pay, how many years do I want to pay this? So what do I want to, and I want to display it by age or year, either way you can do it. And I want to say, oh, I want to pay all years. I may just want to pay 10 years, but heads up, if you limit the pay, if you do an abbreviated payment, just be aware that that's all based on current company assumptions on interest rate crediting and current company assumption on what they're charging for their cost of insurance. The difference between the cost of insurance that shows on the usually on the regular pages of a proposal are also going to have their guaranteed, and the differences are sometimes large. So just be aware that even if I ask for a 10 pay here and just put 10 in there and I just want to pay 10 payments, that's not guaranteed. It's based on current company practice with interest rates current and cost of insurance current. So just keep that in mind. You could also choose your different premium modes again. You could be annual, semi-annual, quarterly, monthly, or instead of a 10 pay, you could actually do a one-time single deposit. Remember yesterday we talked about this. If you do choose to do this with a new contract, then more than likely it's going to be a modified endowment contract. So just be aware that the gain that comes out of the contract, which is going to be coming out first, could be subject to an ordinary income tax. The odds are high, especially if there's gain in the contract. But just remember the death benefit still could pass tax-free, just depends upon the scenario. So I could do a single deposit, but remember that's not a single deposit and I'm done. It's single deposit based on current assumptions. So just keep in mind, I'm always asking, is this current company practice or is this contractually guaranteed? If you ask that in your head all the time, you'll be able to kind of figure out what are you able to offer the client. Now remember, I might have money coming from another contract in a 1035 exchange. And remember, we talked about this before in one of our earlier classes, all about 1035 exchanges. The IRS allows us permission to exchange from one contract, permanent contract, to another. So if I'm talking about exchanging from life to life, I could put in here the 1035 exchange amount. So I might have 30,000, 50,000, whatever that exchange was. I could go ahead and I could drop it into this contract and then resolve to say, well, since I had extra money coming from an old contract, maybe I don't have to pay the regular search premium. So you'll want to be able to say, is that worthwhile to look at your policies? And my recommendation is, if you're doing a policy review, and we talked about this in our earlier classes, if you're going to do a policy review, always be sure when you're doing your review that you collect all the contracts and policies. It's really important to do that. So now that I've kind of figured out, oh, this is what I want to do, I could also say, I could go all the way and say, I only need the coverage for 10 years or 15 years or 20 years. And I don't care about what I have, but I might want to put I want to have 20,000 at the end of that period. Remember, it's still current assumption, so it's not guaranteed. I just want to be able to plug in numbers. I could put 20,000 cash value. I could put in the years, 20 years from now or age 65. I can kind of plug and mix and match with this. And I also, if I'm going to do income, I could assign distributions where I could actually show what I'm taking, withdrawals to basis, policy loans to gain. There's all kinds of things I could do with this because that's one of the key elements of current assumption universal life. It's very flexible. So I have a lot of things I can do, a lot of gamesmanship I can do as a proposal illustrator. Now, when I'm looking at this, I could go to my ledger, and their idea, it kind of gives you kind of a quick look. Here's the premium that it shows, and this is the current premium, and this is the non-guaranteed policy values. Remember, that's just a current practice. And it shows the non-guaranteed surrender charges and the non-guaranteed death benefit. So if you say, I can live with that, but I think they've been pretty good in their history, I can go with that. But if you say, boy, I don't know about that, I'd like to see what the guarantees are. And so you could say, if I paid that premium, now all of a sudden my guarantees only go out to age 74, which on a preferred elite would be almost 15 years short of their life expectancy. So it's an interesting thing. You'll want to make sure about that. And again, also the ledger will show you your basic annual premium, your safety net premium. They'll give you a guarantee for a limited period of time in this case. Your guideline single, what's the guideline single I can throw onto this? What's my guideline annual premium? My 7-pay test, my MEC test, and I can also do a target premium, the part that is commissionable. So you may want to look at that and say, wow, I'm paying $25.04, but only $22.51 is comped. So then I want to go to the real illustrations. And in the illustration itself, I'm going to have it laid out. In every contract, every carrier is different. So I'm looking at their basic. In fact, actually, here we are. It has a little what you're buying. I like about this thing about Lincoln Benefit. It actually walks through. And if you're doing a close and you say, I just don't know how to talk about it beyond the numbers of the illustration, you say, here's what you're buying. Life insurance protection. Any living benefits that we assign. We can talk about that. How to protect your loved ones, since this is an emotional sale 90% of the time. The benefits of cash value. So if you're sitting there looking at, should I buy term or perm? There are benefits to look at here. Some of them have huge tax favoredness. And of course, could you receive a competitive return? Well, that's what we're going to measure. And later on in the week, we're going to actually look at the internal rate of return charges and living to a full, I love this, expectancy. So at standard 2001 tables, this gentleman may be, even though we're showing a preferred elite, they're showing at least to what the standard tables are. And I could look at that, 81, and there's my rate of return. So if I say, what's the rate of return on the death benefit? It's 4.96, which right now, of course, are well above treasuries as far as the death benefit's concerned. And then what it would be if I was in a tax bracket of like 35% or whatever, I'm at 8.275, and then the probability of death right around that time is 46.66. So it kind of lays out my internal rate of return, my life expectancy, my internal rate of return on death benefit and cash value. It's just a nice little piece to walk your client through. Again, it shows our first year, and notice, again, we're doing internal rates of return on death benefit. Of course, if you died first year, the IRR is great, internal rate of return. But more than likely, if you start looking out, people say, well, I didn't die, so what's the living benefit return? And that's when you start to get into later on in your life, I want to get back to 65, hey, that rate of return, what's my rate of return? Well, it might be pretty good. It's just depending upon what time period I do it, and this is my probability of death, my rate of return on my death, and then I could do a cash value rate of return if I so elected. Then I'm looking at my cost for funding. I want to be able to divide the total premiums paid minus any surrender charge in the year I do it and the number of years of coverage, and that will give me my cost of funding. Is it a good deal or a bad deal? I use internal rate of return as one calculation. The secondary calculation, my annual cost of funding. Again, taking total premiums paid, subtracting any surrender value in that year, and then the number of years of coverage. That gives me a basic understanding, is this a good deal? That's how we measure it for current assumption UL.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse. the marketing arm of Brokers Alliance. And sponsored by Lincoln Benefit Life, an Allstate company.